anticipated from the policy announcements at the NPC, which sectors are likely to emerge winners and losers in China?
Well, still very early days for NPC. Just had a day of meetings. If you look at the plan presented yesterday at the NPC by the government, they're talking about GDP growth of 7.5, which I thought came as a little bit of a relief for a lot of people because they were expecting GDP growth target to be set at 7%. Then inflation target of about 3.5%, which was almost bang in line with what people expected, and money supply growth target about 13%, which was a little lower than what most people expected, i.e. Implies that China will keep a close eye on inflation numbers. They will keep a close eye on property price increases and fine-tune monetary policy based on those things. But by and large, by the time NPC ends, we think the thrust of NPC will be on developing the western part of China. Therefore, you could have a lot of infrastructure investment into that region. B, again, enabling the shift from investment orientation towards consumption. Therefore, consumption is another area which would benefit. And third, we think they will implement gradually a series of financial sector reforms, which downplays the significance of the state-owned banking sector, allows the non-banking sector to play a bigger role through markets, capital markets. So that sector is another beneficiary of the potential reforms.
China's trade data out later this week. What will it indicate for the global recovery?
Well, I think given the fact that the data for China in Jan and Feb tends to be distorted by the lunar New Year holidays and the base effect, I don't think the markets will assign a lot of weightage to what comes out on trade numbers for this month. People will probably focus more on the consolidated numbers for Jan and Feb and maybe look at the March numbers to get a sense of how Chinese growth is shaping up. But yeah, I mean, looking at all indications available today, it seems like China's recovery is going along nicely at a smooth pace without being too high.
What assumptions do you have for the yen, and what's the likelihood of a currency war breaking out, especially with Korea?
The hottest topic in town about yen, but okay, let's look at objectively what's Bank of Japan been doing over the last 3 or 4 months. They've bought government bonds, and that is no different from what the ECB did at the height of the crisis in Europe, what the Fed has been doing over the last 3 or 4 years, what other central banks are doing, you know. So all they are trying to do is they're trying to buy domestic bonds to push the yield curve down, give more money to the people and banks to spend so that domestic growth picks up. Now, till they do that, I don't really see it develop into any kind of a currency war. And if you also look back at the G20 communique, it didn't mention yen primarily because all the policies so far being undertaken by the Ministry of Finance or Bank of Japan have been domestic, as in they've been buying domestic bonds. However, there are some rumors that Bank of Japan might embark on a plan to buy foreign securities by changing the Bank of Japan Act. Now, if that happens, I think it'll get into an area where Japan might attract criticism. I really don't know if they're going to do that, but yes, that is something which can be a flashpoint, especially as it relates to Korean won, JPY parity levels. The last few years, the Korean export market share globally has gone up a fair bit because of the yen appreciation. Now it's probably payback time for them, but yes, we do expect even Korea to take domestic steps to weaken the pace of appreciation of won relative to JPY, and that includes rate cuts, maybe a couple of them, rest of this year, keep monetary policy easy.